It looked perfect. Same support zone. Same pattern. Same volume spike. He clicked buy, confident, certain, even a little smug. 10 minutes later, the market reversed. He was stopped out. Confused. Angry. How could the exact same setup fail? He thought. What he didn't understand was this. No two trades are ever the same. Not because the pattern changed, but because the market did. Every trader at some point falls for the illusion. We memorize charts. We study winning setups. We take screenshots, journal every candle. We build our system on the belief that if something worked before, it will work again. And sometimes it does. But then, like a ghost in the machine, the setup fails. Same price level. Same structure. Different outcome. It's infuriating until you understand one simple truth. Markets are not machines. They're human behavior recorded in price. Every price bar is the result of a decision. Every decision comes from a person, or an algorithm programmed by one. And every person brings something different. Emotion, urgency, capital, fear, news, liquidity, bias. So while the pattern may look the same, the players behind it are never identical. That's why thinking in terms of same trade, same outcome will destroy you. In Trading in the Zone, Mark Douglas makes a bold claim. You can have a perfect-looking setup and still lose. Because the market is made up of people, and people aren't programmable. Here's what he meant. What you control. Your risk. Your position size. Your entry and exit criteria. Your mindset. What you never control. What other participants do. How the market reacts. Whether your stop gets hunted. A sudden spike in volume. Unexpected news or volatility. You could do everything right and still lose a trade. That doesn't mean your strategy is broken. It means the market expressed a different mood, and your setup, which worked last week, no longer had the same context today. It wasn't the setup that failed. It was the assumption that the same setup guarantees the same result. Let's talk about Liam. Liam had been trading for 3 years. He was a breakout trader, loved the clean setups. He found a pattern that worked. Tight consolidation. A volume buildup. Breakout candle. Retest. Go. He made money with it. Consistently. For 6 weeks. Then suddenly something changed. The same pattern appeared. But now the breakout would fake. Reverse. Stop him out. Again. And again. 3 losses in a row. He panicked. He started adjusting the rules. Added a moving average. Then an RSI filter. Then MACD. Still failed. Then he removed the pattern entirely. Now he was lost, grasping at setups with no structure. He called his mentor in frustration. Why is the same trade not working anymore? The mentor asked him one question. Are you trading the pattern, or the market behind it? Liam paused. His mentor continued. You're trying to control the market. But the only thing you'll ever control is your process. That hit hard. Liam realized he'd made a critical error. He had confused a setup with a guarantee. He believed patterns created profits. But profits don't come from patterns. They come from consistently applying your edge across a large enough sample size, not expecting each trade to behave. When you accept that no 2 trades are the same, something powerful happens. You let go of expectation. And with that, you let go of frustration. Why? Because you no longer need any one trade to work. Instead, you start thinking in probabilities. You realize, a trade isn't supposed to work. It's supposed to meet your rules. Once you place it, the outcome is out of your hands. This mindset is liberating. It turns pressure into process. You stop asking, will this trade win? And start asking, did I execute my process perfectly? Because that's all that matters. Here's the difference between losing traders and winning traders. Losing traders. Winning traders. This setup has to work. This setup meets my rules. I hope it breaks out. If it breaks out, I'm prepared. Why didn't this one work? That one's part of the stats. Same setup, different result? Different market, new event. Winning traders treat each trade like a data point. Just one in a long series. Their edge isn't emotional, it's statistical. And they understand. Even the best setup in the world won't win every time. But applied consistently, it will make money over time. Understanding that no trade is ever the same is a key psychological evolution. Here's how most traders grow. 1. Novice stage. Sees patterns. Thinks market is repeatable. Chases setups, emotional highs. 2. Frustration stage. Patterns fail randomly. Adjusts system endlessly. Doubts everything. 3. Breakthrough stage. Learns about market randomness. Starts focusing on risk and execution. Stops chasing outcomes. 4. Professional stage. Embraces process over results. Tracks data, builds sample size. Feels nothing about individual trades. The trader who thrives is the one who graduates from expectation to execution. Here's why this concept, no two trades are ever the same, is absolutely foundational. 1. It protects you from revenge trading. You don't need to make it back, because you understand that one loss doesn't mean anything. 2. It eliminates over-optimization. You stop tinkering with your strategy every time a trade fails. 3. It sharpens your edge. You focus on refining your process, not guessing what the market will do next. 4. It frees your mind. You stop obsessing over past losses or wins, because each trade is a fresh, unique event. Professional traders behave like surgeons. They follow the same procedure every time, regardless of how the last patient responded. Snipers, they wait for the setup. Breathe. Fire. If they miss, they don't panic. They reposition. Pilots, they run the same checklist before every flight. Doesn't matter if they've flown this route before. Every flight is unique. Traders must be the same. Run your checklist. Take your shot. Let go of the outcome. I don't need to know what this trade will do. I just need to follow my plan. That belief creates calm. That calm creates discipline. That discipline creates consistency. And consistency, not certainty, is the secret to profit. Here are the affirmations you should build into your trading identity. Every trade is independent. My job is to execute, not predict. I'm not here to win today. I'm here to win over time. My process is my edge. I trust my system, not my emotions. Write them. Repeat them. Live them. Because until your brain believes this, you'll keep trying to force the market to behave like a machine. Back to Liam. After his mentor's advice, Liam took a break. He went back to his journal. He reviewed his last 100 trades, not just the results but the setups, the context, the time of day, the emotions he felt. He realized something. He hadn't been trading his system. He'd been trading his expectations. So he made a vow. From now on, I will act like every trade is brand new. He started rating each trade on execution, not P&L. His win rate stayed the same, but his consistency improved. His equity curve smoothed out. And the wild emotions? Gone. Because he was no longer trying to control the market. He had mastered the only thing worth mastering, himself. Let go of the myth that patterns are promises. Let go of the belief that the market owes you results. Let go of the need to be right. And instead build your identity around this. Every trade is unique, but my process is unshakable. When you embrace that, you no longer fear randomness. You no longer chase outcomes. You no longer trade emotionally. You become what every trader dreams of becoming. Calm, consistent, profitable. Forget about the outcome. Fall in love with the process. Because the market is unpredictable. But your discipline? That's your true edge.